JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the last trading day of this summer. Yep, welcome everyone. Welcome to August 31st. So I hope you had a great summer, guys. So before we jump in, as always, into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which you can find it here if you click on the research tab, and yep, it'll take you to this page which we update on a daily basis. So yep, feel free to visit us here on jfdbank.com. So now then, a quick update on what's happening here globally in terms of the coronavirus. Now, we can see that the numbers are slowly declining, or I would say actually they're starting to range even, actually, because when we get a bit of a decline here, it pops up straight away back to the upside, but then kind of moves back down. It doesn't kind of go above the all-time high here, and yeah, it drifts back down. But again, like I said, for now it seems to be moving sideways. Hopefully this can actually break the this range to the downside if we can apply technical analysis on this, and yep, hopefully all this can move south here in near term. But again, we remain very careful with this, because I mean, previously the numbers did kind of did manage to surprise us. If we can put it this way. So now jumping into the charts, and let's have a look at what's happening here. And now the first one I want to touch on here is Nikkei 225. The index today closed in the positive territory, as you can see on the 28th here on Friday. The index drifted heavily to the downside, sold off and closed in the red. It managed to also drop at one point below this downside resistance line that I talked about previously, this downside line taken from the high of the 10th of June. But as you can see, the bulls were kind of quick to push the index back above it, and the index closed above it. So this kind of indicated that the bulls are not really willing to give up yet, and we're seeing exactly that. Today we saw a nice opening gap here to the upside, and yep, it kind of traveled higher. But as I've mentioned to you guys last week I was saying that what I'm keeping an eye on here is the 23,339 zone, which, as you can see, continues to provide decent resistance. And today we did get a nice push towards it. We tested that level, and then the index drifted back down a little, and closed kind of, well, not only below this level but also below the June high, and which kind of causes a bit of concern here, I would say. However, from the positive side is the fact that we're still very close to this barrier, and we're back above this 21-day EMA shown as the yellow line. So in a way, there is a possibility still to move higher. However, given all this now, we would prefer to wait for a push above the 23,339 level. Ideally, we would like to see a daily close above that, because as you can see, we keep getting these little overshoots, but we don't get a daily close. So let's wait for that daily close above this barrier, and then yes, higher levels could be met. Now jumping into Shanghai Composite, now this one is trading in the green for now because we still have around 50 minutes left of trading here in Shanghai Composite, and the fact that it kind of worked out in a way nicely here, well, I would say probably somehow nicely, because last week I told you to keep an eye on this short-term upside support line taken from the low of the 27th of July. The index drifted lower, and it did break below this upside line. However, what I was saying to you guys last week, that for us to consider the downside, we would like to see a drop below this 3,307 territory, and ideally a daily close below that, in order to get a little bit more comfortable with let's say lower areas. But as you can see, although this upside line got broken, we didn't really get that daily close below this area, and we didn't even actually test this area, and then the index started reversing back to the upside. So in a way, all this kind of is looking quite positive. The fact that we're still trading today above the 3,409 zone right here, that kind of adds a bit of positivity into all this. And of course, now what we're going to do is we're going to target this 3,457 zone, which, as you can see, continues to provide decent resistance. And if you want to be a little bit on the safe side, what you could do here is, of course, monitor that barrier. Now, if we get a nice pop above it, then yes, of course, higher levels could be met, and this would confirm a forthcoming higher high and may open the door towards the highest point of January of 2018, guys. So again, something for you to keep in mind, something to consider, but we need that confirmation break here and a daily close above it first, above this 3,457 zone. Now, in case this suddenly starts reversing sharply back to the downside, still I'll stick to the same idea here, and I'll wait for a drop and a daily close below the 3,307 territory in order to consider a bit of a decline here. Now German DAX. Now here, the index was kind of, to be honest, excuse me, it wasn't really the best performer last week, and basically there was a bit of a mess here. So what I'm gonna do is I'm gonna start fresh, and I'll have a fresh look at all this, and let's kind of take it from here, because again, some of the levels got violated, but then they didn't really work out nicely. So that happens, we have to take that that hit, that kind of that this little disappointment, but we can always start fresh. That's probably the best thing. Now, looking at this picture here, the German DAX is still trading above this little short-term upside support line taken from the low of the 15th of June, and at the same time it's struggling to overcome this highest point of July near the 13,314 zone. So in a way, what we're getting here is a possible ascending triangle here. So of course, according to all the TA rules, you know that these tend to be broken to the upside. However, until we get that actual break, we cannot really talk about any upside. So again, for now, yes, on one hand, everything's still looking quite positive, but probably just to be on the safe side, we'll wait for that push above this 13,314 zone, which is the highest point of July, in order to kind of get a little bit more comfortable with higher areas, guys, because such a move would confirm a forthcoming higher high and open the door towards the highest point of February near the 13,795 zone. So keep your eyes on that one. And in terms of the downside here, of course, we would need to see a break of this upside support line, and also ideally a drop below the low of the low of the 21st of August here near the 12,634. Let's round it up here a little bit, and a nice drop below it could open the door towards further declines. But again, we need that confirmation break, and ideally a daily close below this upside line and below this 12,634 zone in order to get comfortable with slightly lower areas. But for now guys, we are closer to the upside here. I mean, we're to the this barrier here, so in a way the upside scenario is still on the table. we just need that little confirmation, and that's it. And then we can, yep, start aiming for some higher levels again. Jumping into another index, and this one is the dollar index. So this one drifted, you can see that it drifted lower on Friday, and once again it found support near this 92.24 level. I spoke about this level previously, and that level here, and let me just go back into history and show you what that level is. That level is the low of the fifth, let me just quickly double check. That's the low of the 15th. There we go. One moment. 15th of May, no, 14th of May, I think, if I'm not mistaken. Right, let me just zoom in here a little bit. There we go. So this one level right here. So yeah, that's the low of the 14th of May 2018. So this is where the current holdup is occurring. Now, in order to, of course, in order to aim for some lower levels, we need that confirmation break, ideally a daily close below this, in order to consider further declines. But again, we'll be very careful here. Let me just mark this level here. We'll be very careful for now, because on the other hand we also have a bit of a positive divergence here. If we look at our RSI and MACD, then there is a possibility maybe to see this one pushing higher, and also given the fact that we are quite overstretched here to the downside, maybe a bit of a recovery here could be possible. However, again, until we see a clear sign of that possible reversal, we cannot really talk about any yet, because again, for now the trend is still to the downside, and the fact that we saw a bit of a decline here, a sharp decline on Friday, that kind of creates this skepticism around a possible move higher. However, what you could do here is, of course, first of all, keep your eyes on the 92.24 zone. If we get a daily close below this, then yes, we'll start looking at some further declines. A possible further move could be towards this inside swing high of or should I say the highest point of March, near the 90.93 level. But in order to consider a move towards that area, we need that nice daily close below this 92.24 zone. But if this index suddenly starts kind of listening to the RSI and the MACD, and kind of picks up on this positive divergence, then a nice push higher here, and a break and a daily close above the 21-day EMA here, shown as the yellow line, could open the door towards a bit of a larger correction to the upside. Because don't forget that we're still trading below this downside line taken from the high of the 23rd of March. But like I said, from the very short-term perspective, we'll probably wait for a push and a daily close above the 21-day EMA in order to consider maybe a possible move, a larger move higher here towards this downside line. So again, very interesting developments here. Of course, for now we're cautiously bearish, because we need to see that daily close below the 92.24 level first before aiming further south. Jumping into gold very quickly, quick update here. Last week I talked about this one as well, and we managed to break this downside line, which is great. So this medium-term upside support line continues to indicate the direction. And another positive thing is that the commodity moved above the 1962 level here. I talked about this one, and as you can see on Friday it managed to close fractionally above it, so which probably is enough already for the bulls to jump in here and push this one higher. The next target that we're going to be aiming here for, it will be this 2015 mark, approximately around here, marked by near the inside swing low here of the 7th of August, and by near the high of the 18th of August. And if that fails to provide resistance, a break of it could open the door towards the highest point of August, near the 2075 level. So again, keep your eyes on that one. In terms of the downside, now previously I talked about this 1924-25 zone. Yes, we can keep that in mind still, but probably this is going to be the more interesting level here. And well, let me just actually get rid of this downside line, but we would probably wait for a drop below the 1902 1902 territory, somewhere around there. If you like round numbers, you can round it up towards the 1900 mark, but we can start looking at some lower areas if we get a nice daily close below the 1902 zone here, which as you can see acted as a very nice area of support recently. Now jumping into Ripple, so here it's a bit of a mess. So let me just probably clear up this chart as well. Let's have a fresh look. Now what we can see here is a possible, or should I say could be a possible flag, but to be honest it's not really an ideal one, and what I'm talking about here is a possible bullish flag. However, like I said, it's not an ideal one. What I'll focus on here mainly will be this this upside support line taken from the low of the 13th of March, and in a way what I'm going to do here, if this decides to reverse to the downside again, I'll start looking at some lower levels. If we get a drop below the low of last week near the 0.2550 zone, a nice good drop below it would confirm a forthcoming lower low, and yep, a possible move towards this upside support line could be realistic. Now in terms of the upside, of course, ideally, preferably a push above the 0.3262 level here could open the door towards higher areas. It could maybe open the door towards the highest point of February as well, near the 0.3464 mark, but probably from a bit of a short-term perspective, something more closer to the date. Now keep your eyes on this 0.2924 territory marked by the high of the high of last week here. Let me just, yep, that's the high of last week, that's correct. A nice good push above that, yep, could open the door towards some higher areas. So that's why, guys, for now, basically what we're going to do here is we're going to keep an eye on this little area near the 0.2924, and as we pop above it, could open the door towards these highs that we saw here in August near the 0.3262 level. AUDCHF jumping into a few pairs. The pair here, I talked about this pair last week, in the beginning of last week, and I was telling you guys to keep a close eye on this this kind of veg triangle, I would say, and you can see that the upper side of it got broken. Now what I was saying last week was that even if we get a break of this upper side, still the more comfortable level after a break of which we could consider higher areas could come on a move above the 0.6687 territory right here, marked by the highest point of July, and then of course it could open the door towards the highest point of June near the 0.6743, and if that's not able to stop it, then yep, higher levels could be met. So that's why, although yes, it is showing some good signs here, still preferably a push above the 0.6687 zone would be needed. In terms of the downside, pretty straightforward. A drop below this lower side of this formation, and also drop below all of its EMAs, and drop below the 0.6493 territory. All this could open the door towards lower areas, guys, and so that's why for now be very careful, and yep, keep your eyes on this area. So let's not rush into anything. Let's keep an eye on these levels. Now USDJPY, the pair on Friday drifted heavily to the downside, as you can see. However, once again, the 105.30 zone acted as a very nice area of support. As I've mentioned to you guys previously, we need to see a nice good drop, and ideally seeing the daily candle remaining below this area, below this 105.30 zone, in order to consider further decline. For now, is just, I would say, ranging. It's moving sideways roughly between the 105.30 and the 107.05 levels. So that's why for now it's a bit of a tricky one here. And to be honest, if I previously talked about this move here above the 106 and possible maybe test of this downside line, to be honest, now at this point, yes, if we get a push back above the 106 zone, then yes, it increases the chances of a potential move higher here towards the 107.05 or even this downside line. But if you're looking for something more exciting, let's say maybe more of a medium term, then probably wait for a break of this of this downside line here, and then we could start looking at some higher levels, especially if the rate climbs above the 107.55 zone here, marked by the high of the 20th of July, which also, and this move above that level would also place the pair above the 200-day EMA here, shown as the black line right here. So yeah, maybe more bulls could see this as a better opportunity to step in instead of playing around here with this 106 barrier. So something for you guys to keep in mind. GBPUSD, so this pair here is well, had a nice fantastic push higher on Friday. It managed to overcome this 1.3284 level. I talked about this. This is marked by the high of the 31st of December 2019. So in a way, everything's kind of leaning still towards the upside. This is what we're going to do. We're going to continue targeting the upside, and our next target is the highest point of December of 2019, and that's roughly around the 1.3515 zone. So again, keep your eyes on that one. It could be quite interesting, but yep, for now it's a little bit of a tricky one here, so we'll keep an eye on this 1.3284 zone. A nice if the rate continues to balance above it, then yes, the next target is the highest point of December of 2019 near the 1.3515 zone. In terms of the downside, we would need to see a break of this short-term upside support line taken from the low of the 30th of June, a break of which could signal a possible decline here. But again, still that could be seen as a temporary correction because we are still trading above a bunch of these upside lines, as you can see here on the chart. And finally, EURUSD. So this pair had a nice move higher on Friday as well, and as you can see, it kind of pushed above this, well, actually I would say remained above this 1.1815 zone. This is what I was talking about last week. Basically what I was saying, that if it fails, let's say, to drift lower and test this upside support line taken from the low of the 14th of May, then we might see a push higher straight away. However, in this scenario, we will take a bit of a cautious approach and wait for a break above the 1.1965 territory in order to get a little bit more comfortable with higher areas. So a nice good push above this barrier here and above the highest point of August near the 1.1965 territory, and as we push above it, yep, would confirm a forthcoming higher high and could open the door towards that long-awaited psychological 120 territory. So yeah, that could be quite interesting to see, but again, let's not rush into anything yet. As long as it's gonna stay here, it might move a little bit sideways here, so that's why I wait for a break above this. Let me just like do it this way, a break above this. No, there we go. Let me capture this this barrier right here, and yep, this arrow goes right there. So above the 1.1965 territory, a nice good push above it, yep, would confirm a forthcoming higher high, and higher levels then could be met. So keep your eyes on that one. So guys, I really hope you found it useful, and thank you very much for watching and listening. I hope you enjoyed it. I really appreciate your time. So if you want to catch my, for example, video later on, my traders tea time is always 13:15 GMT. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.